Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 31st of March, 2023, and we had a strong week and finished out the quarter with some good gains. The S&P lagged. That's obviously due to the fact that the financials were down 10% this month and 6% year to date, and also there's a lot of energy name exposure in the S&P 500. That was down 5%. Overall, you've got to be impressed, really, that the financials are only down 6% year to date. 10% even down for the month. But overall, you've got to be impressed with this market. So let's take a look at the S&P 500 here on the daily chart on the left, on a 30-minute time frame on the right. That 65 period moving average is the actual 5 days. So what we have here on the left is we got above not only the anchored VWAP from this peak, that occurred on Wednesday, and we've been ripping higher since then, but we also rallied up through the anchored volume weighted average price from the all-time high in the S&P 500. Now, we've been above it before, so I don't really look at that as a particularly bullish or signal here. I look at it and say, that's been a level of interest that has shown importance in the past, but I didn't mean to do that. But we're up through that. What we have to stay focused on is the intermediate term trend. Me as a swing trader, that's where I look to get all of my involvement in the market and do my timing. Now, Monday and Tuesday, it looked like this market was going to fall apart, really. I thought that perhaps we were going to see a deeper pullback, but we held on that 20-day moving average right in there. And at that point, we got back above the anchored volume weighted average price for the week and the 5-day moving average on Wednesday. And you can see since then, we've just been rallying strong, closing right at the highs of the day pretty much and the week. So you've got to be impressed and continue to give the benefit of the doubt to the buyers. It is extended, however, so just be very careful and mindful of what time frame you're trading on and where your stops go. The Nasdaq rallied right up to its high, and that's also beyond the anchored volume weighted average price from the all-time high. That pink line is from last year, and it seemed as though we were going to get a little bit deeper pullback from there as we broke below some support in here on Monday and stayed below it on Tuesday. But again, on Wednesday, we saw that big gap up. So I would suggest you keep a close eye on the anchored volume weighted average price from that gap right there. If it continues to stay above that next week, that's going to be the level that it'll move something like this. And let's just say, this is not a prediction, but let's just say we see something like this on Monday where we start to pull back. I think that that would be a level to look for the possibility of a bounce. We're above a rising 5-day moving average, so it's innocent until proven guilty. On the weekly time frame, we've broken trend lines, we've broken levels of resistance. Again, we're above a rising 20, 50, and actually 200-day moving average as well. This bullish golden cross, as they say, occurred right here. But my opinion of those, because we saw the bullish golden cross in the S&P 500 right here at the all-time high, and we haven't eclipsed that yet. So it's not necessarily a timing signal, but it is, the way I look at moving averages is that they represent indecision. And that's not a bad thing after a bear market. You want to see the market crisscrossing back and forth above and below those moving averages until they straighten out and we start to make a pattern of higher highs and higher lows above them. Over to the Russell 2000, clearly still the laggard. It got that bounce after a shakeout. And this is what I always point out is that we often will undercut an important low. Uneducated money gets stopped out of there. Uneducated money gets short into the fear, and then they get squeezed. And we saw that, once that reversal occurred back up through that prior band of support, it's been up and away from there. It doesn't mean it's been easy though, because look at yesterday. Yesterday we gapped up and it sold off real hard. So it's not easy to, you can look at it and say, well, big week for the Russell 2000, but was it tradable? That's what's important to me. Where was the low risk entry? Maybe right here on Tuesday, I'm sorry, on Wednesday, and then as it started to fail, sell some. But I'm not going to chase these gaps in here either. I think that you've got to look at the Russell 2000 as still just kind of guilty until proven innocent. It's within this big range that it's been in for close to a year now, and we're at the bottom, half of it, or under the bottom half of it. Right up above, we have the year-to-date anchored VWAP and the 200-day moving average. If it rallies up into that area, it seems likely that we would at least get a pullback and then maybe make a higher low. but still, this market seems like more of a waste of time. Of course, there's individual stocks in every one of these sectors that is in a great uptrend, and there's ones that are in horrible downtrends as well. The key is to focus your action on the individual stocks, and that's what I do every day for subscribers to alphatrends.net. The semiconductors, this is a very bullish looking weekly chart. We're above the anchored volume weighted average price from the all-time high. That would go right here. And you can see that we're above the year-to-date anchored VWAP. That has held as support here the last month or so. We've got a rising 10, 20, 30, and 40-week moving average. We've made, we now have a pattern of higher highs and higher lows. So as long as that pattern is intact, it's innocent till proven guilty on the weekly time frame. It doesn't mean we're not going to see pullbacks, though. This is what's most likely, something like this to develop if it's going to continue to move higher. If instead it pulls back next time and then fails, well, then that's where you would want to say, that definition of trend no longer exists for this time frame, so you wouldn't want to continue to be long on that time frame. This week, same story. We saw a big gap up, and on Wednesday, after looking really like it was not going to do well, we broke below this support, and then a big gap up. It caught sellers, short sellers off guard, and from failed moves often come fast moves, and that's where we are. So if we see pullbacks down towards that 5-day moving average and the VWAP from actually this gap up, that's where we'll be looking for potential support. So keep an eye on that 5-day moving average. It's likely to take this trajectory at least for the first few days of the week. The XBI, which is the biotechs, they're getting a bounce in a downtrend, but the key is it's still in a downtrend. It's a broken market. It's possible that this might end up being a little bear trap in here and that we get back up into the range, but getting back into the range wouldn't make it bullish. I think that you'd need to see something like this develop for bullishness. But if it can get back up into that range, it will save a larger, deeper sell-off. So really, I look at it and see it's below a declining 20-day moving average, declining 50-day moving average, declining year-to-date anchored VWAP. If it continues up towards this level, maybe pull back and then get going. But again, it's there's just better places to put your money where it will be treated better. And certainly financials is not an area to do that. This pink anchored VWAP comes from the high of this recent move right before Silicon Valley Bank fell apart. And that really kind of comes together with this red 20-day moving average. So I think that, you get a little bit further rally in here. I wouldn't be surprised at all to see the banks come back down something like this. A lot of people might be looking at it on a shorter term time frame and think this looks bullish, but again, you've got the anchored volume weighted average price from the beginning of that move there that's likely to offer some supply. Rallies to the declining 20-day moving average often find supply as well, so just be really careful with those. Energy stocks are still bouncing up into this prior band of support right in here, so they're really in an area where it seems likely that we're going to find supply. Now, so far we're not, and we have this pattern still of higher highs and higher lows on the 30-minute time frame, so you don't want to sell short. Clearly, a lot of people say prior support acts as resistance. We'll see its potential resistance because we've got the anchored VWAP from that peak right here as well. Above that, we've got a declining 50-day moving average in year to date, so maybe it comes up into here even still. There's nothing to say you should short it here because the shorter term time frame is still showing that the buyers have control. So, my opinion is leave it alone. Oil itself is bouncing. This is the anchored volume weighted average price off of the April 2020 lows. So this was 3 years ago where it made those lows. And that hasn't been perfect, but we got to bounce in that general area. And if this rally can continue, perhaps it runs all the way up to the anchored VWAP from this peak right here from June of last year. While I'm on the trading view charts, let's take a look also at Bitcoin, because Bitcoin has rallied very nicely this year. We saw that most recent pullback just a couple months ago come right to the anchored VWAP from the low of 2022, and we got a tremendous bounce from there and all the way up to where it's kind of supposed to go, which is the anchored VWAP from the all-time high. I wouldn't be surprised to see some kind of deeper pullback, down towards 20 23, 24. I wouldn't be looking for a breakout. If it does happen, that's great. But to me, it seems risky. If you're going to make new purchases in here, I think your stop would have to go really probably about 26,400 or so, because if it was to break below that, I think there's a good chance it would continue down towards that 24,000 level.